Yesterday, the Nigerian exchange closed with a gain of 145 billion in the market capitalization as the bulls maintained their grip on the local bourse. The all-share index increased by 0.59% to close at 44,929.33 points. In the same vein, the market appreciated by 145 billion. At the close of the market on Tuesday, the Nigerian Stock Exchange market value stood at 24.4 trillion. Meanwhile, market breadth closed positive as UP Crate led 27 gainers as 8 losers stopped by RT Briscoe at the end of the session. Since the start of the year, the stock market has advanced by 22,212.89 basis points, equivalent to 5.18%. Join us in the studio to discuss this and more. We have Ambrose Omodion, the Chief Research Officer at Invest Data Consulting, is here with me in the studio. Good morning, sir.
Good morning.
Yes, we looked at the market, still continuing its bullish run. What do you say about that?
It's a good omen for the market, and I believe today will tell us if this follow through will go through. Since on Friday we saw the market in the green, not yesterday, and the funny thing is that during the MPC meeting, it's expected that the market should be on a caution mode, but we saw the opposite side. Market was very, very bullish, and we saw, improve momentum in the market. It shows that other investors has factored in. They expected a hike already, and they acted positively. But we are waiting to see today. Now that it has been adjusted by 100 basis points, let's see if the market will also continue that direction. Or don't forget that this adjustment is going to change the face of the market all around. One, the fixed income market is expected to be increased in yield there. And also for equity market, investors want to take advantage of how can I edge against inflation, because even the yield market, because inflation is almost about 21.09, they are already in red, really red return. But for equity market, if you can edge against inflation, there are also some equity that has about 12, 13, 14 to 15 dividend yield in terms of dividend alone. Yes, capital appreciation of 10%, 20%, plus that yield may likely give about 32, 35% return. And also the time value of money, because if you are going into those fixed income markets, especially treasury bill, that is 15% yield as we speak now. We're going to stay 364 days for that position to wait. Yeah. Why for those in equity? Now we have between now and April, March forward for you to get your dividend. That means if by God's grace, at the end of the general election is coming in February, and we're seeing company earnings with the corporate action around that February, March, and this corporate action coming with a good dividend and plus capital appreciation, because immediately after the election, whoever that emerge as president, I will tell you there will be what we call market rally, just post-election rally that will come because of what confidence will not be built that in the next 4 years, nothing like election will come around Nigeria. That will tell you that also if foreign investor that also watching what is going on in our political terrain now, see who they choose that is likely to come, and the person finally wins. It will see that was to bring confidence that more fund will come to Nigeria. And what CBN is doing also, the now design and also want to see them play out into the new year. That's why I said the investor will say what we're expecting to see what we call a financial market and economic reset. If that reset comes in 2023, that will not create opportunity for investors to make money. For those that also know how to do it, that's why this time for investors to not panic, but rather let them go for knowledge. Because when you are investing with knowledge, you are about to be on the winner side. Despite you can't predict market 100%, but if you have knowledge, I'll tell you your risk will be low. You can also make more profit.
Yesterday you were on the show and you said there's a possibility that they can hike it by 100%, and they did. So what do you see this, what support or what things should the market be looking at now?
Like I just said earlier, if you see what is happening globally, you can see that there's that tendency or kind of indication that the central banks across the globe are trying to slow down in terms of rate hike.
The US,
yes, you know that they are aggressive before now, but they are seeing that, in part of what they did, if they continue in that pace, the economy is already seeing a sign of recession is around the corner. That means they need to slow down so that you won't sacrifice the economy for rate hike. That's why I say what CBN did was quite okay, but we expect that to do 50. This is what they did about
about only some people agreed for 50. While 9 people said let's do 100 basis points.
For me it's okay, but also in you can see that they already kind of how will I put it now? Is it a filler that they're likely to do 50 instead of 75? They have been doing 45 for the past three consecutive time. Now they're doing 50 also tangled with what we have done here. And their own is coming in December. I believe that also going to change the face of the market. But I believe that because of the time volume money and the shorter period for it to make return, equity market is still a better place for you to look at. But if you don't have that appetite for risk. You know, equity markets are with high risk. You can still go to your fixed income market, take your 15% and so forth. I believe that the PFA that are holding cash and individual investors, now that I've seen the direction and knowing that this earning end of the year seasonality will also impact some company performance, that we might see a better number, what we saw, in third quarter. These are the things that I expect that will also impact the market positively as we are going to the end of the year seasonality and also post-election.
Well, let's look at today. What do you think of today?
That's why I said, we expect market to react to the outcome of MPs. But what happened yesterday? We have about 27 stock against 7 loser. In the sense that they knew that what was expected. On Monday, we have about 26 stock gainer. Yes, today I have 27. That means for me, I want to see that if that trend will continue today, that would be a very good one. That tells that okay, they are seeing opportunity more in the equity space, and that means that fund will expecting to start coming, because even though they say 100% baseball will also influence yields in the physical market, they are still also below the inflation, and that means they are still in negative return. But if you want to reduce the negative, we might get to around 16, 17. Why I believe that also capital market with a good number, stock market with a good number we're expecting from the companies, and those are giving us sign that yes, out of their third quarter they have outperformed their full year in 2021. We expect a better payout at the end of the day. Okay,
but so you don't see people running away from the equity market?
No, the people understand. Before now, people have the fearful ones they have visited the market. Those are the market that those that understand what they are doing, and also we expect that with what has going to happen now, we are seeing that the market is already at a strong oversold the region. And when you see market is oversold region, so that stocks of price of stocks are cheap and they are low. That the attraction, and knowing that the corporate action is around the corner, people will not take advantage to buy into these companies, especially those companies that are sectors that we are seeing their earnings are standing, and the figure they posted from this bank are also standing. Then go down and sleep and wait for what your dividend and also capital appreciation in the few months to come.
Let's have your final thought then.
Yeah, like I just said earlier, let's wait what market will do today.
Let's wait. We're still going to look at this more, but meanwhile, still to come, members of the organized private sector and economists have, however, reacted to the MPC interest rate hike, saying it will lead to production shutdown and higher bad loans. We'll be looking at this when we come back from this break.